You just know a quality stock is oversold, but you don't know how to enter effectively. Often in the past, you enter too early and get stopped out, or you enter too late and leave too much profit on the table, or without enough size. And then maybe you sell too early and regret doing so. I'm sure that this has never happened to anyone watching this video. Well, in this video, we're going to discuss how to enter an oversold condition, how to get into an oversold stock while controlling your risk reward, and determining an effective exit strategy to maximize your profits. If you want to improve your trading, to grow your trading account, stick around and this video can help. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. Well, in this video, you're going to learn how to enter an oversold stock like a professional. You're also going to learn the patterns that offer a quality entry, how to determine an effective exit strategy when you're taking profits too quickly and with too much size, how to use market indicators to make better trade decisions, how to use a sector that your stock is in to make better trade decisions, the importance of developing an overall trade strategy for each trade, and as always, the biggest reward from videos like this should be how to think through a trade like a pro. For those who want to see winning trades to add to your trading business, check out this video. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
All right, so I'm going to be going over a trade I made in Tesla on Thursday after their earnings release. So the overall trade strategy, I know Houston's been identifying these. I've been talking to Tim a lot about it as well. Essentially just looking for a stock that's...
I love this already. I love the idea of putting a trade strategy right at the beginning. Gives us a way to figure out, hey, how we're going to go about trading this overall, and sort of sets everything in context. I do want to say one thing, which is, I don't mean for these trade strategies to be, this is exactly the way we are going to trade this setup. This is the only thing we're going to do. That's completely unrealistic. Trades almost always are dissimilar in some way. But what's great about having a trade strategy like this is it gives you so many less things to think about in real time and gets you to narrow it down to maybe when you're in a trade, you're thinking about maybe 1 or 2 things only. And you can make better trade decisions when you're down to, I've got like 8 variables set. I'm just checking on these other 2 closely. If they hit, I'm in. I'm aggressive. Much better and stronger position to be in than trying to figure out the 15 things you're supposed to be thinking about when you haven't laid this out beforehand and trying to measure that in real time. So that's what I like about these trade strategies.
So a couple things that I just want to see happening to put on this trade. So I'm looking for a stock that's released earnings or just has some changing fundamentals catalyst to it with high institutional ownership. If it can be with high short float as well or in a long-term downtrend, all the better. So pre-market, I'm going to be looking for areas where I want to be looking for a long, where large players maybe start to value buy, maybe starting to value buy can be kind of an inflection point for the trade. So after an initial sell-off from the institutions, I'm looking for a lower high to get formed. That should say high or low, to begin establishing a long position. And this should be complemented by a change in the tape. just to kind of show that the party's over for the shorts in the short term. And this is somewhat of a trade to hold, although in this particular example, it's not a super long hold time.
You know, we did a video about a short trade. Greg, you did one. And we talked about a short trade that we made in Netflix. So we actually made the point, the real point of the video was to talk about something different than the actual trade. But then inside of that big point, we talked about some scalps, some swings, some consolidation trades, some VWAP trades in that we made. We are making trades, and trades have, when the trade's done, another trade can set up. Like, we can make a short. It's one of the big advantages of being an active short-term trader. We can make a really good short. We can make a really good swing short trade, cover, and then look for a long. That can be part of our playbook. We're not sitting here saying the only thing we can do is take trades to the short side in Netflix. The only thing we can do is take trades to the short side and beyond needs. Although that might not be true on this desk right now, but or the only thing that we can do is take longs in Tesla or Netflix. The trades have ends, and then we look for the next one good trade. One good trade. One good trade.
So the bigger picture for this play, SPY was gapping to all-time highs in the pre-market, and in general, I feel like we've seen these get sold off pretty aggressively at the open before they find support, and a lot of times they'll start reversing from there. But this is definitely going to be an important point for the Tesla trade I make, as well as obviously we're in earnings seasons. Large institutions are putting on big positions and moving around. So intraday fundamentals, I'm not really like a trade Tesla kind of guy, but obviously it was in play on this day. Gap down 12%, missed on EPS and revenues pretty badly, as well as the CTO is leaving its position. I do like to kind of look for a silver lining for these plays. So in this case, they announced that they're holding their guidance for 2019 vehicle sales in line, and had positive outlook for the next 2 quarters, just to give a little color and context to the trade itself.
So when you see the CTO leaving, when somebody is leaving the company, sometimes people get nervous about that. Why is this high-level person leaving the company? If the company was doing so well, why would anyone possibly want to leave? Maybe they know something that the public doesn't know yet. With the CTO, people aren't going to be as alarmed. When the CFO leaves, people get pretty alarmed. When the CEO leaves, people get pretty alarmed. But that is when high-level people start to leave a company, that is something that people are measuring.
And I'm pretty sure, I might be wrong on this, but I'm pretty sure the CTO is around since the inception of Tesla, so people care about what he does, I guess.
Yeah, or somebody's just really good at their job is leaving the company, and the company's not going to do as well because they've got to fill that role with a lesser person.
Sure. So intraday technicals, you can read the stats I have up there, but the ones I'm really looking at, RVOL, 2.54 at the end of the day, but at the time I made the trade, it was like 7.5, so very much in play. Institutional ownership, almost 63%, which is decent, it's not amazing. And then short flow to 30.7%, which is really nice because when I see a big sell-off at the open after this huge gap, all those shorts are going to be pretty incentivized to take their profits, so that could give some short-term buying pressure that could help my long. So a couple daily charts. Here's SPY. You can see we're at highs right here. Tesla, so since December, we were in a pretty obvious downtrend, and then on the news surrounding the Model 3 seemed to kind of break out of it, and I imagine a lot of people were getting quite long in here, and that idea seems to be somewhat invalidated now on this gap down, so a lot of these people might be trapped and are forced to a decision of if they want to get out of their positions and sell what they have. So just keeping that in mind contextually. So for intraday, I'll get back to why this is important, but we do see the sell-off starting actually in the pre-market at like 8:30 or so. We start selling off from the highs, and then that continues at the open until around 9:45, 10 when we start basing. Same deal with the AD line, kind of just turning around at that same point, and then Tesla again, and to the point you were making about there's opportunities in both directions. this trade can actually have a bit of a duality to it, where you can make a really nice momentum trade to the downside here. I didn't actually take it just because it's kind of spready and moving very quickly. But there's opportunity to short this to the downside, but then also look to get this long here, which is what I end up taking.
Yeah, when I see something that's weak on the longer term chart and weak on the intraday chart, I'm looking for a pattern on the intraday chart that alerts me that the sell-off is over. I'm looking for a capitulation pattern. I'm looking for volume to really increase. I'm looking for that puking pattern where the longs are giving up. I'm not seeing that there. I'm not seeing capitulation pattern there. I'm not seeing that immense increase in volume. I'm not seeing that significant sharp decline to the downside. And so if I don't see that, then I'm looking for another pattern. Another pattern might be value buying. They're trying to push it lower, they're trying to push it lower, they're trying to push it lower, and they can't get it to go lower with elevated volume. Not necessarily puking volume, but with elevated volume. And then another pretty common pattern I'm looking for is something that's holding a little bit higher. Another pattern I'm looking for is it finally reclaims VWAP after spending many hours below it. So I'm thinking through, I'm not sitting there saying, I think Tesla is oversold. I'm sitting there saying, I think Tesla's oversold, and I want an intraday pattern to match my thesis. And here are some that have worked for me, and there are others. Those aren't the only patterns for getting long something that's oversold. Those are the patterns for me that make sense to my brain. And that's the self-talk and the work that I'm doing. Go ahead.
Exactly. So for reading the tape, so after the first 15 minutes of selling off pretty hard, we find short-term support in 226 to 227 here. And then at the same time, SPY was tanking, as well as all of the FANG names except for Netflix. So just the overall market is turning over. Just want to keep that in mind. And then after it bounces from that sell-off to 226, it starts to turn over again and catch support at 227. So that's that consolidation at a higher low that I'm looking for that cues me into I should start looking to put on my long here for this trade.
So I really like how you're looking at how the FANG names are doing overall as well. Are they starting overall to catch a bid? I'm looking at SPYs, I'm looking at Qs. I'm trying to drill down more specifically how are the FANG names doing and seeing if they're starting to stop going down. Are they starting to stop going down? And now is this holding a little bit higher? That's more information for me to make a good risk-reward trade.
So I have the executions from TraderView here, but I feel like this chart doesn't give a whole lot of detail. So I'm going to go over the executions on this chart here. So at the open, we do see that sell-off like I was talking about, pretty sharp. And I was also at the same time watching Facebook and Visa. Those were two of my stocks on my watch list. And I noticed those were tanking pretty hard. And then obviously SPY was falling, Qs were falling, the AD line was trending down. And then I started looking through the FANG names, they're all falling. So I'm starting to think, well, maybe this isn't just a Tesla thing. Maybe this is the overall market that is exacerbating this move to the downside. So at that point, I see it catch this support here, and I'm seeing it bouncing, and I'm hoping to see the market turn around, which is kind of what we see, this bottoming out here, 9:45 to 10:15-ish. Same deal here. Looks like the AD line is getting ready to reverse and turn around. So once we get this bounce and then starts to pull over, I'm thinking, cool, all I'm really looking for now is for it to catch higher, which it does, and consolidate. So this is kind of perfect for me. And then at this point, I'm just kind of fighting for price, and I managed to get in at 226.53, which I was pretty happy with, risking below. I believe this wick low is 226.37. So I hold this, and then starts to work in my favor, which is nice. And then we get this consolidation here, and it's lasting kind of a while. It seems like, okay, maybe we're making a lower high. We're still below VWAP. And I'm just getting a little antsy, so I end up taking half my shares off. I want to say at like 228.60-ish, just because I'm like 2 points in the money on these shares already. I'm going to feel like an idiot if it just turns around and reverses all the way against me. I'd rather secure a little bit of my profits. So I end up taking half here, and then...
Okay, so let's think about that. So when you got in that trade, what is the trade? Is the trade a scalp? Is it what are you expecting from the trade when you're buying that?
It is a longer time frame hold. Like, by that I mean like probably over an hour, a couple hours. I'm just worried at the beginning of the trade. I want to see if this is actually going to play out how I think it is. And so within the first 15 minutes, if it's giving me a signal that maybe it's not going to pan out, then maybe I should cover some risk while I have a decent profit locked in. So that's what I was thinking. I don't know if that's a reasonable thing to do, but that's what I was considering.
Yeah, I think you got to be careful about that. So I don't know what your expectations were for a bounce. I don't know where you thought this could go to. I'm not clear to me exactly how high you thought this could go up. That would help me inform whether or not I'm going to take something off 2 points into the money and or how much of the position I'm going to take off 2 points into the money. I like the idea of taking profits into something that's working. I don't like the idea of short-circuiting a longer-term trade based on inactivity on a much shorter time frame. If you're going to make a swing trade and it's on a longer time frame, then let's do that. And it might be that inside of your rules of this longer term swing trade that you do have this system where you're taking off into profit. But I want to be detailed about that. Like remember when we started with our trade strategy slide, like I'd want that in the slide, which is I'm in, here's why I'm in, here's my taking profit strategy. If it gets held up early into the move, I'm going to take off a certain percentage. A half strikes me as too much there. 20%, I think I'd feel a little bit better about it. But you want to be working that out and have that as part of a strategy as opposed to what it felt like you were thinking, which is I'm 2 points in the money, I don't want to give back that open profit. That's not really the trade. The trade is, I think this is oversold and I think it's going to go back up and I want to capture most of that move. And that at times requires not getting sucked into the minutia of something that gets held up. If something's going to bounce, what does it tend to look like? At the beginning of the bounce, it doesn't look that great. It's a crescendo effect. I wrote about this in One Good Trade. It literally is a musical crescendo, which is the start is quite soft. And then as it continues to bounce a little bit more, it gets a little bit louder. And that noise is people starting to see that this is oversold and could bounce. It starts soft. There's not as many people that see that this can bounce. And then doesn't go down. It goes up higher. There's a little bit more people that see that this can bounce. Doesn't pull in very much, makes a new high. There's more people that see that this could bounce. Doesn't really go down. There's more people that see this can bounce. And what happens is at the top of the bounce, I tend to make fun of these people. I'm like, look at all the geniuses buying this thing up after it's bounced 10 points. The way they're holding it on the bid, you'll sit there and be like, where were you guys when the thing was tanking? If this is such a good buy, 10 points higher up here, like where were all of you? It's because it's that crescendo effect. And towards the top of it, there's a bunch of people piling on, seeing it, wanting to join in. That tends to happen. So if that first move is not so strong, part of a bounce strategy and part of studying bounces is that you recognize it could be just it could be the quietness at the start of a bounce. And the best way to actually play bounces is to look for those holds higher and add when it holds higher and breaches higher. So good to think about that.
Yeah. And for this trade strategy, I do like scaling out into profits, but I do agree that it's too much size to cut half, and I talk about that in the trade review later on. But I do get out a half, and as is tradition, it goes straight up from there. And then, so we get a pretty vertical move above VWAP, and at this point I cut here, 20% of the size I have left, which wasn't very much, into like 230.3. And then at this point, I'm 5 points in the money. I don't think that, I don't expect, the idea of the trade isn't that Tesla's going to rebound and we're going to see 240 soon. So at this point, almost a full ATR in the money, and we seem to be stalling a bit. I take the rest off at 231, where we've had a little bit of a notch prior in the morning. And so by that point, I'm flat on the trade. So that's what the executions look like.
Yeah, so I'll just say this about this trade then. You really need to fight for price then. You can't make this trade if you don't get in at a good price. So good that you got a really good price. If you didn't, it won't work.
Exactly, and that's something I was having trouble with earlier. I just wasn't fighting for price in this consolidation zone here, and it was screwing up the whole trade. I couldn't take big size, and I would get scared out very easily. I would take profits too soon. So yeah, it's super important to make sure you're fighting for price on this trade. So for trade review, like we were talking about, I think a half is just too much. I think it would be a bit results oriented to say like just selling any is a bad idea because it went up. Based on what I was seeing, I feel like securing a little bit of profit is a good idea, but probably a decent bit smaller. Another thing, I stopped looking at SPY when trying to decide when I should exit out of the trade, and I think that could have been a mistake as well. If we go back to SPY on the intraday, so here from like 10:30 to 11:15ish, we just see topping action that looks like, okay, maybe sellers might regain control, and that would be a nice area to start to look to exit out of a position in my Tesla, because I'm essentially using this as like a market vehicle with a lot of volatility. But in the same area, we see topping out in Tesla. So on my final shares, I probably cost myself an extra like 50 cents a share.
Yeah, totally agree. If you're using this as a market vehicle, you need to be watching what the market's doing while the stock is going back up. Is the market just going up and it's following? And then, oh, now are we getting stuck up here? So if it's just going up and bouncing because the market is reversing itself, and then market starts to get hung up, can't get above a certain price, that's a trade decision then for this stock as you're using it as a market vehicle.
Yeah, my main issue with this, no surprise, is sizing. But the reality of the situation is like, even with pretty liberal slippage, it's like 25 to 30 cents of risk, and ended up making over $3 on the trade. And that's better than I could probably expect to make on average on this, but no matter what, the risk reward's got to be 5 to 1 and up. So I need to get comfortable being okay with a loss in the position if it happens, because the payout is just really high. And then going forward, I want to continue using SPY and the AD line as points of confluence for the trade. Again, just another factor that should have led me to get bigger than I actually did.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next, and what you found helpful from this video. From all of us at S&B, train and trade well.